What's up? Some new faces in here, familiar faces as always. Got to see you all in here, learning, looking to learn as well. I'd love to see it. Alrighty, let's get down to business, man. As you can see, this month has been pretty generous to me. I'm happy with it. And this month has also been a bit tricky for most. I think most of you in here who haven't been in the market for more than, I would say, 2 years, maybe you're having a bit of a hard time reading it only because you don't know the seasonal tendencies just yet, right? This is something that I was looking forward to since the beginning of the year, and it's kind of something that I am prepped for mentally going into it, right? So let's talk about some of the stats here that I have on my chart. So overall in the month, I'm up $46,000 on 3 accounts. This does not include evals or any other like YOLO accounts. This is strictly my main 3 Express accounts on StopStep. Nothing else. So 46,000 on 3 accounts, as you can see here. Just 1, 2, 3. Nothing else on them. My win rate is 54%. Now this is actually pretty average for me. I average a win rate like this mostly all year round, which is pretty good. Now my profit factor and my RR are a bit low. And I explained why last time in my last video I dropped. I think it was last week. The past 2 weeks have not been generous to me in terms of holding my trades. I've been a bit skeptical and a bit nervous to do that, only because it's been choppy high time frame for the past, like I would say, 6 days up until this week. So last week was pretty choppy, which you guys all saw for yourself. So in times like that, right, these numbers aren't the best to me, in my opinion, but in terms of playing the market how it should be played, which is just playing it by ear, this makes sense completely. Considering this is my first month on these accounts as well. So everything on here makes sense so far to me, and I love to see it. The P&L is fantastic. I'm happy with it. And I've been mad consistent. I've only had 4 red days this entire month, and 2 of them were the first week of the month. So I have been consistent like crazy, and I'm going to share with you what I've been doing for me to kind of get that consistency that I've been missing for the past few months before this month. But yeah, man, this has been a very, very nice week or month for me as well. So as you can see, I hit a very, very big day right away on these accounts. And I'm not going to lie to you, it got to my head, right? I got a little bit cocky. Bam, and then bam, bro. 2 terrible days back to back. Ew. Disgusting, right? But I locked in. I locked in and got on my shit. And ever since then, it's been on pace, bro. On pace. So, the main thing for me that's changed is now that I'm not live trading anymore, I'm not trading for long at all. Yeah, bro, 46 trades. Well, this is also 3 accounts, too. Remember that as well. So, it's like, what's 46 divided by 3? You get it. You get the point. It's still a lot of trades, though. Way too many. Way too many. So, with that being said, what I've been doing is I've been taking my win just fucking off, man. Right? I'm at the point in my trading where now I can look at the chart, know what's going to happen in maybe a couple minutes, and get on the chart and just hit my trade, and that's it. And most of you guys are on the chart for way too long. Way too long. If you're a beginner, it makes sense because you need to tape read and actually gather data for yourself. But if you're at the point where you know what you're doing, you have a model and everything, like I would say if you've gotten a payout before, maybe twice or 3 times, you shouldn't be at the chart more than half an hour to an hour a day. Like that's like your cutoff time is an hour. Done. If you can't find anything, it's not clear to you, you're done. That just makes the most sense to me. Because at that point, you're looking for a setup, trying to force something on yourself. So, if you're somebody who struggles with greed, over trading, so on and so forth, get on StopStep. Because you can't blow your account in one day. You can lock yourself out after a good win. You can lock yourself out after a nasty win as well, so you don't blow your shit. Like, you need to have something in place to prevent yourself from going against yourself. You see what I mean? So, it's just one of those things where, like, you really have to understand that if you're struggling with trading, but you have studied before, you know the concepts and everything, and you still can't find success, it's because you're just fucking yourself over 1,000%. Know what I mean? So you really have to look at yourself in the mirror and figure out your problems and go forward with that. Now, in terms of my trading, what I've been doing overall to get this, which is pretty good, is simple. So I have a student of mine who's a one-on-one, and he's been following his rules to the T. He is the best student I've ever had to date. And he's not in here today, but he is the best student I've had to date because his rule set and his discipline is A1, and he is doing everything to a T. And what I taught him, because he had a really hard time figuring out what to look for the charts, the schedule and everything, he works a 9-to-5 job, right, was he was trying to force trades whenever he had time to trade. So he was taking these C-tier setups that weren't the best, but, he just wanted to trade because he felt like he was missing out on a lot, but he really wasn't. And I gave him this rule set to kind of follow, and it's basically saying this. So if you're somebody who wants to write this down for yourself, if you're struggling, then you can. This is what I do for myself every day when I wake up. I wake up late, market open, right? Bum style. Unemployment to the max. And I say to myself this. Where is price currently at? What did ONS do? What does that leave for New York? And then also, where should price go according to my ideologies? Okay? So stop dick riding these people on TikTok, bro. It's not going to help you at all, man. Like, oh, the forever model, or this guy does this, or soap, or whatever the fuck, dude. I don't know why you guys dick ride everybody on fucking TikTok. It makes no sense. Because you guys try to hop on a strategy and it doesn't work for you. What are your ideologies saying to you? What is working for you? What do you see with your own eyes? It makes no sense why I see all of you guys that are brand new dick riding everybody on TikTok with that has a paper trading account. It makes no sense to me. So this is a simple list and it's so effective. Where's price at? What did ONS do? What does it leave for New York? Where should price go according to my ideologies? Okay? Simple. So let's look at it right now. If, let's say I just woke up. Or let's actually do today. Start at 9:25, that's when I woke up. This is me waking up 5 minutes before New York open. I list. Where's price currently at? Price is currently at discount of our most recent dealing range. Bouncing off of OTE, but not showing any strength breaking above this high. Giving me bearish vibes. This is what I'm seeing. Okay? That's where price is at. What did ONS do? ONS opened and went lower, going into discount range, not giving any strength going forward. Also consolidating. What does that leave New York? If ONS does not move very much, that means New York will have an expansion. Again, keeping it very simple. So if New York is going to have an expansion day, is it going to be a scalp day or is it going to be a hold day? Somebody please tell me. If you can expect New York expansion, is it going to be a scalping day or a holding day? A holding day. Okay, cool. So I'm looking to catch a bigger move. So also what that tells me too is looking for a bigger move. I can make my money that's still very, very good with less size because I'm looking for a bigger move, which means I'm risking less money today. So what I do, I size down going into today, right? Super simple, right? Where's price at? What did ONS do? And again, the last part of the question is, where does price want to go according to your ideologies? We can use ICT, we can use order flow, we can use volume, we can use indicators and a bunch of bullshit, bear flag, bull flag, whatever the hell, right? But it all led to the same road if you were correct in your analysis today. It doesn't matter what you use, you're looking for shorts. So yesterday I dropped a little paragraph about why I was looking for shorts going into today. The volume has been decreasing every single day, but yet we've been going up every single day. So we've had 3 green days in a row with low volume for New York. Somebody tell me, what is it called when you have a directional move with low volume? LRLR. And what is LRLR designed for you to do? It's like a hot knife through butter, right? Just goes right past it. Which is why I said look out for a violent drop today. And that's exactly what we got. Okay? So my ideology is saying short, 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 short. And now to play it safe, right? And for a very conservative target, bigger dealing range, OTE is beneath liquidity here with an imbalance below. I mean, how much better do you want it to get than this? Right? Now let's go over to the open. This is going to be 9:20, 9:15 candle. And then this is 9:30 open. So I didn't get in right away off 9:30 open. There was a bit of a pullback to the upside here into a 5-minute imbalance where SMT was made with ES at these highs. That was my entry. I wanted the lows of 300. It was in my chat. That was like my for sure target there. But again, I'm looking to cut at OTE at these lows to play it safe. Because I don't need it any more than that, just being greedy. So entry is here, 5-minute FVG, SMT at the highs. Very, very clean position for shorts, like so. Bada bing, bada boom. Clean position. And what do? We continue to dump. The model is so simple. The method is so simple. You just break down what price has done, where it's currently at, and where it should go to your ideologies. Nothing more to it. Even if you used a very loose entry and got in at New York Open, you would have still been fine. But again, what do you do if you use a loose entry with a bigger stop loss? To accommodate for that bigger stop loss, what do you do to mitigate risk? You just size down. So I'll tell you right now, right? My entries have not been super on point. I'm not trying to top tick or bottom tick these moves. If I get in late because I'm on my phone or I'm driving or I'm taking a shit while the market's opening, right? And I get in just to get in, guess what I do? I size down. But I'm still winning these trades because my idea is right at the end of the day. What kills the majority of you, and you guys will never, ever acknowledge this, is that you try to... Okay, before this, show of hands. How many of you are right in your analysis but get stopped down below your account still? It is a common theme behind all of you, bro. All of you do this. Even some of you that are very, very good, and you know that you're good. But all of you still do this. You use extreme leverage and blow your shit, but you're still right. And you're like, dude, I was right. Oh, let me go reset my account and try again. And you blow that one. It's a bad habit, right? Do you want to know the secret to kind of fixing that is? Just lower your size. Just lower your size, dude. Just lower your size. I saw somebody on Twitter. His name is Jade Cat. I'm sure you guys know of him. He's like on a $1 million run on Apex right now. And he was saying himself, he was like, dude, I don't use heavy sizing. He was all, if anything, my entries are super like lackluster. They aren't special. They're not tight. My stop loss is pretty loose. And he was like, but I'm just right more times than I'm wrong. And I use light size. He uses, I think, 5 to 10 micros. And that's it. And he sizes it whenever he's going right. So it's like, if you think that you're better than somebody making $1 million off of payouts, which I'm not, right? None of us here are. Take his advice, man. Like, really. What's the rush? And that goes back to being rushy and greedy and trying to get your goals way faster than what you deserve. It's just greed, man. That's why it's a sin. So, that's all it is, dude. Like, most of you guys here have very good analysis, and trading can be very, very simple. Just size down. You're using too much size. So, let's do another example here. So, that is what I call... I don't even know what the fuck I would call that, dude. But that's a simple like list for you to write down for yourself. Where's price currently at? What did ONS do? New York. Where should it go? Simple. Simple, simple, simple. Because this is like a filter for yourself, right? So look at, if you ask yourself this question and price is not in any imbalance or any spots to flip or to give an expansion, you know that one, you're going to be trading chop, and two, it isn't worth your time. So what do? You walk away. Come back later. What did ONS do? Did it expand or consolidate? If it expanded, what do? You size down because you expect consolidation from New York. You de-risk yourself. And where should price go according to my ideologies? This should frame your model. FEG entry, breaker entry, structure entry, OTE entry. This right here should frame your own personal models because they're your ideologies, nobody else's. It's what your eyes see. Okay? It's what your eyes see. So, with that being said, how many of you can agree that if you followed this checklist, that you'd be better? Because I gave this to my guy like a month ago, and he's doing fantastic. Like, I am actually very proud of him. And I do it for myself, too. Like, this is all I do. I'm at a point now where the models are, like, in my brain engraved, so it's just natural at this point. It's kind of like, what's the word? Intuition. But at the same time, too, I still use a checklist for myself because I do have days where I want to just go on tilt and, like, full port my shit because I'm getting impatient. Like, don't think that I don't want to full port my shit because I want to get my Porsche. I do. But at the same time, too, that's not how you play this game. Let's see. So, let's go over to current price now. So, what do you guys see for current price? Where's price at? Price is at a current daily imbalance. It's retesting the breakout that we had beginning of the week. Tomorrow's Thursday and Friday. Do you expect expansion after all this? Yes or no? I'm saying a no. If you don't know, it's fine. No. Chopper City? Okay. I can agree with you. And I'll tell you why I agree with you. I agree with you because it is very oftentimes that whenever we have a big move away from accumulation like this on a low time frame, we see some choppiness BS for a while. Maybe 5, 10, 15 minutes before we actually get a move. The daily is no different. Price will behave the same. It'll accumulate, manipulate, move, fake out, manipulate again, and then actually make the move itself. So I saw a bunch of guys on Twitter saying, we're so back, we're going to go long now. The market's back. I bought this many calls on this stock and that stock and this stock yesterday. And they got just shit on this morning. All right? So not only did that liquidate the majority of people, but now everybody has their hand burnt from putting it into the fire now. They're going to be scared to go long again, which is when we probably go long. So I'm open to the idea of us just eating this whole entire move up again tomorrow and Friday. But we will see what price gives us. And until we are in a very clear ranging structure where we're just doing this over and over again, which will happen beginning of May, maybe June, I'm still going to be taking my base hits that I've been taking all month long. 100 points here, 50 points there, I'm done. Because that is all I need. Once we get into range season, yeah, I'll hold for longer. Why not? Put a stop loss right there and let it ride. But for now, I am completely happy with what I'm doing. I spend minimal time at the charts. I'm making good money. And my mental clarity has never been better because I have just been spending half an hour at my desk every single morning, and that is it. So, with that being said, I want you to understand that you don't need to do so much at the charts to make money doing this kind of stuff. Just keep it simple, please. Keep it simple. Any questions for me while I'm here? Save your money. Because right now you have no system. You have no rules. You have no discipline. So essentially, instead of buying that eval, just Venmo me the $100. Like, just, I'll send you my number. Zell me. You might as well. Because the thing is, bro, is when you have no plan, you have no model, you have no discipline, you're not going to go anywhere. You're burning your money for what? And if you really want to show me that you have true discipline, get a paper account and grow it. Because it's hard to stay disciplined to yourself and actually treat it like a real account because it's not real money or an eval. If you can do that with a paper account, you're golden. Because it's hard not to be a DJ on paper. And it's hard not to, like, be dumb on paper. You know what I mean? Like, it's just paper, so you don't really care. So if you can show me that you care about the process more than the actual money, then go buy an account. But right now, all your mind is focused on is money right now, right? And that's understandable. That's why we're doing this. But it has to be flipped. It has to be process over money. And it's actually hurting you. Because now that you're focused on money, guess what you're doing? You're burning the money, ignoring the process. So in your pursuit of money, you're just losing it. Dude, it's so counterproductive. It's like you acting like the gay best friend to get to sleepover, but then you actually turn gay. Like, mission failed, bro. You know what I mean? Mission failed, man. That's so real, dude. Mission failed. Speaking from experience, nah, bro, no. That happens to you. Hey, man, happens to the best of us. They be giving you facials and pedicures and shit, and you're like, oh, this is kind of nice. Anyways. Okay, so from my experience, and I think a few others in here too can vouch for this, options are bound for you to lose money unless you're very, very, very good. All right? Futures is simple. Essentially what you're doing is you're assuming the price will go up or down. And if your assumption is right, you make money. With options, it's sort of the same thing, but you have to be more precise in 1, your timing, 1, your direction, 3, your strike price, and Greeks. There's too many variables and options for beginners to become profitable right away and quickly. There's too many variables. It's just simple. Up or down. Which way do you want to go? Up? Alright, cool. Okay, you were right. You made money. With options, it can go up, but you'll still be down money. Because of Greeks, and expiration dates, and strike price, and so on, so forth. So for right now, Nate, because you are one of my students, I want you to only focus on futures. Don't even look at options. Because options is also only your own personal funds. Not there yet. Options is a dangerous game. Eventually, once you get some bankroll, you can start playing some leaps, some longer term options, start doing a call or put wheel, right? And that's when options actually are used for options were designed for. But in terms of day trading, it's very, very, very risky, okay? Unless you're really, really consistent in your rules and everything as well. Now, scalping and holding is simple, right? Scalping is taking a little move off the top and then that's it. Scalping, right? It's in the name. Holding is also in the name. You're holding for a longer period of time to catch a bigger move. So as of the past 2 weeks, I've been kind of scalping. 50 points here, 70 points there. But normally, I am a holder by heart. I like holding for longer trades. But due to market conditions, I've been scalping. I have to adjust to that kind of stuff. My most used time frames, the 15, the hourly, and the daily. If those 3 aren't clear, I size down. If the hourly is a bit weird, I go to the 4 hour, and if that isn't clean, then I really size down. Because the hourly should be clean, and the 15 should be clean. If those aren't clean, you're probably in chop or accumulation. If you're in a nice range with some nice pullback opportunities, you'll see it very clearly on those 2 time frames. And the daily, obviously, for just direction in general. And the 4 hour as well. So as of lately, I've been doing the 5, and that's really about it. 5, 15, hourly, and daily. Again, it's keeping my trading so simple, it's crazy, right? Like, if the hourly isn't clean, guess what? I size down. I don't even trade. About some NQ. Okay, so the market as a whole. This drop here was 14%. This is a proper pullback that we see typically whenever we have a new year opening or a new election cycle. This is normal. This is expected. So as of now, I don't think that the tariffs are going to have any effect on the stock market anymore. I don't think that any political, any agendas are going to have us crash any lower than this. This is a projected and I would say expected drop from NQ. A recovery from here would be great. Because the thing is this, right? NASDAQ as a whole dropped 14%, but some stocks like Tesla dropped fucking 40%, right? Some stocks like Amazon dropped 30%. Some stocks like Meta dropped 30% as well. So you're seeing these bigger companies drop down 30, 40, 25%, but NASDAQ's only down 14, 13%. Dude, and this is common sense, right? With that being said, that's a buying opportunity for all those Max 7 stocks. The pullback here is factored in now. You got what we needed for the news cycle for election, which is typical. Start loading your bags, right? Fuck your 3% high yield savings account. Buy some stock. Best way to deal with greed. Sometimes take dumb losses because of this. Okay, let me ask you a question. Does that greed come after you take a win or before you take any win or any trade? Because it depends. After a fat win sometimes, like the same day or the next day. Next. Okay, so that necessarily isn't greed. That's just you being fucking cocky. Because I feel like if you have a big win one day, right, and you hold off from trading, and you go into the next day like super confident and you're like, I can make it back or I can make the same amount again, right? That necessarily isn't being greedy. That's just you being cocky that you can do the same thing again. And I can show you proof of this right now. Ready? The proof is this. I had one gigantic day, got cocky. Bam. Bam. You get too confident that I can do it again. Right? And naturally naturally humans are like that. When you win and you make a good amount of money, you're gonna risk more because you feel like you're the shit, right? Because I feel like you aren't risking more to make more in terms of money. You're just doing it to match the same pace because you want to continue what you're doing already. That in that kind of unrealistic pace for what you have at your disposal. So like if you had a bigger account, then you had to be fine. But for what we do right now with prop firms, you need to really understand that those home runs are a one-off thing. And you can't go into the next day looking for the same thing again either. Because for me, it's not for me personally, I don't even look at the P&L until after I'm done with the day. Like I thought I made 3,000 like this morning, but I actually made 5. Okay? With that being said, it's more about me being right in my trade ideas versus the money. That's where I get upset because I'm like, oh fuck, I was wrong. I'm not like, oh, I lost $500. Oh, that really sucks. I was like, I'm wrong, dude. That's what gets me upset. And I feel like you confuse that with greed. But then this happens too, where, let's say, for example, right, you take a loss and you're wrong. And after you sit in your loss for a little bit, you think about the money and you're like, oh man, I actually lost that money. And then not only is it about you being wrong, and money comes into the factor too. But this is kind of what helped me is this. So recently I've been hard on myself a lot about a lot of stuff, personal stuff, right? And I had to sit down with myself and I was asking questions and writing down stuff in my journal, and I was like, dude, you know what? Like, what am I really doing this for? And what am I doing now to benefit me in 10, 15 years? So I stopped thinking about trading in terms of my P&L for this week or for this day or for this month. I'm more thinking now like, I can't wait to see where I'm going to be at in 5 to 10 years with trading. So now those losses don't even matter to me because I'm thinking about the next 5, 10 years or next 2, 3 years. How am I going to be better than myself 5 months in advance? So losses don't really matter to me as much anymore because I'm not looking for short-term results. I'm looking for that long-term J-curve. And that's what all of you guys need to understand. You're looking for short-term growth and the short-term results, the money, the greed. But you have to understand that if you lock in for 2 years starting today, you don't care about the money or the losses, and you're only here to learn, dude, all of that goes away. And you start doing months like this. Now, greed is common, in most because we need the money. So I'm not sure about your personal situation right now, but like for me at this point, if I make 5,000 in a week, I don't really care. I don't need that money like right now, you know? If I make 25,000 in a week, all right, cool. It doesn't really matter anymore anyways. It's like just thinking about like, okay, as long as I'm making forward progress, that's all I really care about. You see what I'm saying? So if you're somebody who's like trying to stack really fast and everything, it matters more to you than it would to me. And that will naturally go away once you start getting more and more wins booked for yourself. But again, to get to that point where it doesn't matter to you anymore, you need to think about the long-term stuff versus next month or in 2 months and 3 months. Think longer term for yourself. That should help you. Like, don't think, I need to hit 6 figures by fucking March or by April, right? That's a fantastic goal. I hope you do it. But having that goal for yourself puts pressure on yourself that you don't need, especially with trading. Let the overall time carry you to your progress, man. And that happens, bro. So, like, like, for example, right? What were you doing in that time that you're seeing success? Were you really, really worried about the money or the process to get the money? Which one was it? I guarantee you the process. Exactly. It's the process, man. You're not chasing the money anymore. So just go back to that, man, because the process is going to carry you to that goal anyways. Like you're going to get there, brother. If you're profitable now, you're going to get to where you want to be at in a matter of time. It's going to happen. So stop trying to force shit. And that is exactly how I am right now. I don't care about the money. What do you consider gaps? Okay, man, so look at this. This is how I view price. Again, keeping it very, very simple for you to all understand and follow along with, okay? An analogy I used when I was first starting to teach in TFF, actually, was this. And it's changed the game for me. Is you have to imagine yourself painting a wall, okay? So imagine this. I give you a black-ass room, and I give you a bucket of white paint. And I'm like, paint the walls white. Naturally, when you're stroking up and down, on the wall, you're going to leave some streaks on the wall, right? There's going to be gaps in between the white and black paint. So imagine that. You go too fast upwards, what do? You leave a streak in the paint behind. Right? Okay, buddy. You leave a streak in the paint behind. So what do you go? So what do? You go back down to fill the streak. So imagine this right here is you painting the fucking wall. Upstroke, downstroke, upstroke, upstroke, downstroke, upstroke, downstroke. Everything is balanced. This is all purely white now in a black wall. Then you go way too fast up. Oh man, I went too fast. Let me go back down and fill in that streak of paint. That's it. So the way I see imbalances or gaps in prices is simple. It's areas that need to be refilled eventually or retested. Because that's showing one thing, right? That move was erratic. It's not balanced. Not many people got into it. So on and so forth. So all of those things lead to one final explanation, which is you going back to that price point eventually. Sorry, I had a burp. So like gaps in price are simply just magnets to me. That's what I'm looking for all the time is where's there a gap in price that price is going to go to refill or retest. That's all I do. So like this morning, right? That short I was looking for, that was the first thing I saw. I woke up, I'm like, gaps. Okay, cool. I'm bearish because of X, Y, and Z. We went over it. Where's the gap at? There's a gap under liquidity right here. It's small, but it's there. It's simple, dude. Look. So like, for example, if I'm bearish on price and I'm looking for it to have a nice move down like it did, right? I'm looking at structure. We have these lows here, which are soft, meaning they're not really like really strong structural lows. And I'll tell you why. Go to your hourly time frame. Those lows really aren't a strong swing point in this whole dealing range. So our true dealing range is from this low to this low. So if I'm bearish on price, I'm targeting that natural swing low, which is 2,300. Easy. Simple ass target. See what I'm saying? Like, I keep my shit so simple now, it's ridiculous. Like, if you gave me a 5-year-old right now, he would be profitable before he's 8 years old. I would put my life on that. I'd put my life on that, bro. He would be making money before he's 8-year-old. I'm not giving you a 5-year. All right, dude. Okay. Wait, you see what I mean? Like, it's that easy, dude. It's that easy. Go back on Twitter. Forget about learning options, covered calls, the wheel method, leaps, etc., etc. Don't even worry about bonds or what futures even are. Just give me the chart and give me a 5-year-old. Okay, dude, that's sounding really bad. And he will make money, dude. He will make money. Is there a time where you don't know where prices headed? Of course, dude, all the time. All the time. What do? Ready for it? I don't trade. It's that simple, dude. Well, that's the thing, right? A setup, a setup is made of that gif is too funny. A setup, right, is a few things. It's a stop loss, it's an entry point, and a take profit. That makes a setup. An FEG is not a setup, right? In FEG, the stop loss being the swing low, targeting the previous week high, previous daily high. That's a setup. So if I see a setup, I know where price is going. See what I'm saying? So if I don't see a setup and I don't know where it's going, then I don't trade. Go over change state of delivery. Yeah, of course, I got you. We'll do it very, very, very easy. Ready? We're gonna do it super simple. Again, that's my whole theme, is keeping this shit simple. Let's go to a time where we were bullish, like so. Okay. So I'm gonna talk to you. I want you to answer me, okay? In the chat. What is this? It's a low. Okay. What's this? It's a high. This is a low, and this is a high. Can we agree on that? Okay. What's this? A low, right? It's a higher low. What's this? Higher high. Okay, so now this is kind of where it gets kind of tricky, which is where CSD comes in, right? Because CSD isn't a market structure shift. It's the beginning of a structure shift. So for me, for example, right? Some people will classify this as a low here too. As soon as you break this low here, you're showing bearish tendencies to begin a market structure shift, which is true at this low here. So really, how I constitute an CSD is simply whenever you're breaking a relatively weak, or I would call them soft, low or high. Basically, whenever price is turning from pure bullish order flow into bearish order flow. Because as you can see here, there's no clear, or even soft lows here. It's all uptrend. But this right here, it found footing, equal lows here, 1 minute time frame, low, low, it found footing, going up. It should keep extending upwards before we see another big pullback. So this right here would be the change in state of delivery in my eyes. That's how I see it. So basically what it's doing is showing me exactly when it's going to flip before it even flips. Now we can do a step further, okay? Breaking the low also as in closing below, not just wicking. Exactly. Exactly. So it's the beginning of a structure shift. So for example, some guys would have, let's say for example, this is like a 5-minute FEG right here where you flipped, right? Some guys may enter off of the CE of the FEG, which is valid. You can do that. But some guys wait for a CSD out of the FEG as extra confirmation. And you can enter off the change of state, like so. Stop loss at the high, because you're following structure at this point now with the change of state of delivery, targeting the structure lows, like so. That can be a trade. Assuming this was a 5-minute FEG. See what I'm saying? Make sense? Cool. And yes, when it's chopped, I don't look at the chart. I'd rather go watch Instagram Reels. Come on, man. Scroll max for that time. Exactly, this guy gets it, man. Whenever I'm in a trade or it's chopped, number one method, pull out the fucking Instagram and start scrolling Reels, dude. At least 50 a minute. At least, bro. My algorithm can't keep up with me. Bubba, exactly. Nail on the head. Bing. Exactly, brother. If I don't see a setup, I'm out of there. It's like, okay, bro, here's another analogy for you guys. Maybe you guys can relate to this. Right? So, your boy texted you. It's Friday night. He's like, hey, let's go to the bars and get some huzz, right? And you're like, you know what? Let's go. I'm down. You get to the bar, and it is laced. And I'm talking about laced with 4s and 5s. Okay? Instead of doing the right thing and walking out, what do? You get absolutely shit-faced. And then you nail a 4. And then you wake up and you're like, why did I do that? Right? That's the same thing in trading, bro. If you walk into the chart and you see no setups, all you see is 4s and 5s. If you don't walk away, you're gonna end up regretting that shit the next morning. I guarantee you, brother. I guarantee you. It's reflex. Oh shit.